Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a Vaxart report, and let me tell you, it involves some financial maneuvering that might just leave you scratching your head. Are they raising money to fuel innovation or just trying to stay afloat? Let's find out. This document is a Form 8K, a current report filed with the Securities and Exchange Commission. These reports are used to announce major events that could affect a company and its stock. This one was filed by Vaxart in March of 2025. The big news here is that Vaxart entered into an at-the-market offering agreement, or ATM agreement, with Citizens JMP Securities and B. Riley Securities. Basically, this agreement allows Vaxart to sell shares of its common stock over time directly into the market. It's like having a spigot to slowly release new shares. The company could sell up to $50 million worth of its common stock. This is important because it means Vaxart is looking to raise capital, which could be for anything from research and development to paying off debts. These shares will be sold under a previously filed registration statement. This simply means that the company had already prepared the paperwork with the SEC to allow it to sell these shares. The managers, Citizens and B. Riley, have some flexibility in how they sell these shares. They can sell them directly on the Nasdaq Capital Market or through market makers, basically anyone who is ready to buy. They can even negotiate private sales with the company's okay. Vaxart has some control here. They can tell the managers not to sell shares if they can't get a price that Vaxart finds acceptable. This protects the company from selling shares too cheaply. The agreement isn't set in stone. Vaxart can end it with a few days' notice. The managers can also end the deal if they want, or if certain conditions in the agreement aren't met. This part is legal boilerplate. It means Vaxart is making standard promises and guarantees about the company and the stock it's selling. It also lays out who is responsible if something goes wrong. The managers will get a cut, receiving up to 3% of the money made from each share sold. They'll also get reimbursed for some expenses. This exhibit is just a legal opinion from a law firm confirming that the company is allowed to issue and sell these shares legally. And finally, it's signed off by the Chief Financial Officer, Philip Lee, which makes it official do. Now, let's zoom out and put this all into perspective. Vaxart is a biotech company, and biotech companies often need to raise money to fund their research and development. Selling shares through an at-the-market offering is one way to do that. What does this mean for Vaxart, Killicid? Well, on the one hand, it gives them access to capital if they need cash for a clinical trial or to expand their operations. This agreement allows them to get it relatively quickly. On the other hand, selling new shares dilutes the value of existing shares. That means each share dilutes the value of existing shares. That means each share is now worth a smaller piece of the pie. If you're a current Vaxart shareholder, this is something to keep an eye on. Is this a good move for Vaxart? It depends on what they do with the money. If they invest it wisely and develop successful products, it could be a great move in the long run, but if they burn through the cash without making progress, it could hurt the company and its shareholders. So there you have it, Vaxart's ATM agreement in plain English. It's a way for them to raise money, but it also comes with risks. As always, do your own research before making any investment decisions. Thanks for watching Corporate Decoder. If you found this helpful, please like, comment, and subscribe for more insights into the world of corporate filings. Let me know in the comments which company you want to hear about next.